Billionaire real estate investors don't know what I'm about to share with you. This is how you're going to build forever wealth, legacy wealth. If you don't come from money, now money can come from you. Real estate pays 5 ways, and this can shake up your entire family tree. Now you have a concrete plan. I don't come from wealth. I build it myself, and I'm laying out the architecture of how I did just that in a simple way. This is chapter 4 out of 5 in this free course. The 4th of 5 ways you're paid is that real estate investors are rewarded with a generous basket of tax benefits from the government. You're doing what they want. You're providing society with housing. And informed people know that if you spend money on certain things, perhaps solar panels or education expenses, you get a tax break. But with real estate, you don't even need to spend any money to get a tax break every single year. Incredibly, you get the tax deduction anyway. It's easy. I'll show you how. Hi, I'm Keith Weinhold, Get Rich Education founder, Forbes Real Estate Council member, best-selling author, and longtime real estate investor. We'll soon take your 27% total rate of return that we tallied up from the first 3 videos, come up with your return from the tax benefits in this video, and then add them all together. It's time to make something crystallize here. And this can rock your world and even induce some disbelief. Some people say, don't work for money, get your money to work for you. We've all heard that. Here's the heterodox. Here's the paradigm shift. If you want to build wealth, don't get your money to work for you. I bet you've never heard that iconoclastic stance before. Your best and highest use as an investor is not to get your money to work for you. It is making other people's money work for you. OPM. See, if you want to build wealth, do you think that you would have to think and act differently than the masses? Yes, you do. And this, though, is your differentiator. Even multi-decade billionaire real estate investors don't realize what I'm about to share with you here. Forever wealth is built. Early retirement wealth is built. Your standard of living is indelibly elevated beyond what you ever thought possible because you're ethically using other people's money 3 ways at the same time. The bank's money for leverage and the loan, which we covered in the first video. You're utilizing the tenant's money for cash flow and loan paydown, which we covered in videos 2 and 3. And then you're using the government's money for generous tax benefits at scale, which we're covering today. You're using other people's money 3 ways at the same time. This does not mean that you are exploiting people. Just the opposite. Do good in the world. Provide people with housing that's clean, safe, affordable, and functional. Do that, and you'll be more profitable long term and never get called a slumlord. We're about to break down the concrete details of your generous basket of tax benefits. Go ahead and put a like on the video if you like how I'm breaking it down. Hey, I told you that you're going to hear some things in this series that you've never heard before. Well, I sure have been rolling them out. This Real Estate Pays 5 Ways course is brought to you by Get Rich Education's sister site, GRE Marketplace. It's where you can find smart properties in the most investor advantage markets that are all conducive to this strategy. We also have free personalized investment coaching at greinvestmentcoach.com. Rental property income is generally taxed at ordinary income tax rates. You don't have to pay tax on all of your rent income. The tax deductions are generous. You can deduct from rental property your mortgage interest and operating expenses, which I won't cover here, a depreciation deduction, which we'll look at closely, and when you sell down the road, you can endlessly defer your capital gains tax so that you never have to pay capital gains tax all of your life. And what does this really mean? Well, if you buy a rental property for $200K, like we are in our example here, and after many years, you sell it for $500K, your capital gain was $300K. Well, in most investments, you need to pay capital gains tax of at least 15% on this. You take a $45K hit or more, but with real estate, when you sell, if you generally replace it with a property of equal or greater value, your capital gains tax is zero, absolutely zero. In fact, I've never paid capital gains tax on my real estate my entire life. Now, rental property taxes are somewhat complicated, and I'm not a CPA. I'm giving general guidance. I'm not going to get into your basis and these other adjustments. And in fact, I'm not even going to consider your benefit of this deferred capital gains tax in tallying up your rate of return. Instead, let's only look at your return from the tax depreciation portion of your basket of tax benefits for both simplicity and to keep our example conservative. Yes, even though your $200K rental property in our ongoing example tends to appreciate in value, the government says you can get a tax break because they say the property depreciates or wears out over 27 and a half years. That's just what the IRS guideline is. This only applies to rental property. There's no depreciation deduction on a primary residence. Let's do it. On your $200K property, you can only depreciate the structure's value called the improvement, not the land portion. We'll say that your structure or house's value is $150K and the land is just $50K. Even the IRS knows that land doesn't wear out, only the structure. Divide your 150K structure by 27.5. Yep, pretty weird arbitrary number, but that's how long the IRS says it takes to wear out. That gives you 5454. That's how much you can depreciate or shelter from taxes. If you're in the 24% tax bracket, that's $1,309 in tax savings. Divide that by how much you have invested in this property. Again, that was $50K when you made the down payment. This is about a 2.6% return. Let's be conservative and round it down to 2%. There's our number. From the fourth of 5 ways you're paid, we're layering on another 2% return. Now, can you really call a tax break a return? It sure is in the case of this tax depreciation on real estate, because you didn't even have to incur an expense in order to get that deduction. That's why some people call it the magic of depreciation, because usually to get a tax break, like I was saying earlier, you have to make an expense like pay for fees to attend a conference or buy solar panels or pay automobile expenses, but you don't here. So the 2% rate of return for your tax benefit is even more conservative when you realize that we also are not digging into how this piece of real estate can make you also eligible for something called a qualified business income deduction, a cost segregation, and something called bonus depreciation, where you can step all this up. And for simplicity, we aren't going to run examples on different marginal tax brackets, and there are income thresholds and other thresholds on whether you're single or married. And of course, we're excluding that erstwhile capital gains tax that you can legally duck here. To collect all the tax benefits without me having to get deeply involved, at the end of the year, my property manager just sends my property's financials directly over to my bookkeeper. And yes, I know CPAs are watching this right now thinking that 2% is much too low of a return from your basket of tax benefits, but that's all we'll use here. We're going to add this to the ROIs that we accumulated from leverage appreciation at 20% return that we got in video 1, cash flow at 4% in video 2, and an ROA at 3% in video 3, plus this 2% from tax benefits here in video 4. Yes, you are now up to a 29% first year total rate of return from your 200K single family income property. And now you know how to use other people's money 3 ways at the same time. Again, the banks, the tenants, and the governments with these tax breaks. Also, be sure to listen to me on the Get Rich Education audio podcast. It's different from what's on this channel. Every week I'm on Apple Podcasts, Spotify, or wherever you get your podcasts. It has long been one of America's top real estate investing shows. Back here on the Real Estate Pays 5 Ways course, coming up, yes, the 5th of 5 ways, the cliffhanging conclusion. And this 5th of 5 ways in the next video is a big one. It's your second biggest profit center, and most real estate investors don't even know that it exists. And you're going to learn how to profit from something that actually makes most people poorer. We'll take our 29%, add the 5th way to it, and it will culminate in your total return on investment. If you miss any of these videos, you'll never quite know how it all goes together. So be sure to both subscribe and hit the notification bell too. If you're watching this later, just click on the video popping up on your screen, and I'll see you there.